Folks, we have a monster jobs number next week. Again, we will get the JOLTS report on Tuesday, ADP report on Wednesday, but the big Bureau of Economic Labor Statistics number will come out Friday. Remember last month, it came in at a whopping 12,000. 12,000.
Yeah, yeah.
Now, if history is like last month's, that will be revised down and actually might go negative. That will make this jobs report number very important. Was it weather related? Was it Boeing strike? We're going to see.
Hey,
We're going to talk about the Santa Claus rally. Let's talk to Dan Bird. How you doing, buddy?
I'm doing well. Welcome to December.
Yeah, December 1st, folks. We've got 1 month left in 2024. Um, Welcome to the last month, Dan. It's been a wild year already.
That's why I mentioned the Santa rally because a lot of people think it's the whole month of December, but it's really not. It starts on the
Yeah.
24th, the day before Christmas.
Yeah, the last trading day before Christmas, right?
Yes, correct.
Yeah.
It's actually the last 5 trading days of the year, technically. That's what it is.
Very, very cool.
Just so
Well,
happens to
let's
be the day before Christmas where it starts this year.
Very cool. So let's talk about the jobs number. Obviously, last week we did get in the third inflation print. It went up. You and I talked about it going up. It went up for headline and core, broke trend. But the Fed has really told us the inflation's going down, but you got to watch the jobs market. Last month was a horrible number at 12,000. I think going negative with the revision. What say you about next week?
It'll be interesting to see what the revision is. Be interesting to see if it revises up for a change.
Okay.
Who knows? Who
Okay.
knows? That those revisions I think are a little wonky anyway. So I don't pay too much attention to those. But the unemployment rate is certainly one to pay attention to.
Yeah, last month was 4.1. Again, it peaked at 4.3, I think 2 or 3 months ago, back down to 4.1. Do you see it going up from here?
Well, the estimate is 4.2.
Oh, it is. Okay.
Yeah,
I
but
had not seen that.
I don't think that's what'll happen. I think it'll actually stay at 4.1,
Okay.
and I'll show you why. I'll show you why right now.
Okay, let's do it.
Okay, can you see that?
I can.
So I have a Black Friday special that runs till Tuesday.
Nice.
Anybody interested in signing up? It's for new subscribers only, unfortunately. Just go to this website, breakpointtrading.net, which is also where the newsletter is on this little box right here,
Hmm.
and you can subscribe. But let's go to the the claims. See the claims over there on the right?
Yep. Down, down, down. Last month or last week, I think it was 212, I think.
Yeah, there's one more week that's not in this chart
Hmm.
from last week, but it was down also.
Yep.
So the trend for the month is down. And that's why I think, and you can see down here the unemployment rate
Hmm.
went up to 4.3, 4.2, 4.1, and then flattened at 4.1. That's why I think it's going to probably stay at 4.1.
Okay. Yeah, one of
Um,
the things one of the things I just want people to realize, again, we talk about the weekly unemployment claims on my channel every Wednesday. No, Thursday. Every Thursday they come out. But I keep highlighting for folks, please watch continuous claims because I think what's going to happen in this cycle is I don't think the unemployment rate's going to explode higher,
right.
but I do think the duration of folks on unemployment will shoot much higher. That's kind
Mm-hmm.
of my call for this jobs market.
So if I understand what you're saying, then the unemployment rate may stay around 4.1, but it may stay there for a much longer period of time.
Yeah, I'm saying it's going to stay below 4.5. That's kind of,
Okay, yeah.
it'll be a good jobs market, but there are going to be cracks. And again, as somebody who still remembers the early 80s, that's really what that second recession was.
Yeah.
It was the duration of unemployment and people being on unemployment so long that they ran out of benefits.
Oh, that's
That's
true.
what,
That's a good
yeah,
point, actually.
that's what
Yeah,
I see
because
coming.
because unemployment benefits do have an expiration date on them.
Correct.
Yeah, that's a good point. So this is the unemployment rate, and this dashed dark red line right here is 4.5.
Yeah, that's my ring the alarm button 4 5.
Yeah, I agree, and that's if you follow it back, that's pretty much normal where the normal area is.
Mm-hmm.
The Fed said 4.4. If it goes above 4.5, I agree. That's when it might start to really accelerate.
Mm-hmm.
But it's still at 4.1 right now, right
Yep.
there. And I think it's going to stay at 4.1. And what you're saying is that it's going to stay there for quite a while. It's just going to
Yes.
go sideways through here, up between there and 4.5. Somewhere in here, it's going to go sideways.
Yep. Yep. Correct.
Which that of its own, I don't think is a big problem. I think the expiration of an unemployment benefits could be, though.
Correct.
So where this might really cause some issues is further out. How long do
I
unemployment
believe the
benefits?
current standard, unless there's government intervention, is 6 months. I believe.
6 months? Okay. So if let's say we're just starting right now, and down here you can see the rate of change for the unemployment rate right
Mm-hmm.
there. It's actually ticking down right now. But if we go 6 months out, let's say we're starting right here, we go 6 months out, that puts us into May of next year,
Mm-hmm.
right? Which is, all of these indications that I've talked about regarding the recession watch, which are right here in this little box.
Mm-hmm.
They're all indicating somewhere in the April, May timeframe is when a recession could start.
Yep.
So that would actually line up with that unemployment rate if it just continues for longer than people expect.
Correct.
So I think that all kind of makes sense.
Okay.
We'll see.
Yeah. Do you know
But
what the jobs expectations are? I actually didn't look this morning. Like good last month was
yeah, I can tell you if you go to my newsletter. Actually, I have these every week. I put what's coming up right here. So this is last week. Here's next week.
oh,
Okay, so Friday
202.
202, 12,000 last month, 202.
Okay.
And
Yep.
last month was
Interesting.
12, but I think the forecast was around the same, 202. I think it was around
I
one
think it
eight.
was 100. It was 120,000. It was about
Oh,
120.
it was okay.
Yeah, because they were backing out the 50K from Boeing strike. Right. They'd
Oh
already
yeah,
backed
right.
that out.
Right. Yeah. So it went to 12. So, but here's the unemployment rate right here,
Mm-hmm.
4.2.
Okay.
And this is as of yesterday. So that could change between now and next Friday.
Right.
But I think based on the claims numbers, I don't think it's going to go up to 4.2. I think it's going to stay at 4.1. But even if it does, let's say it does go to 4.2, what that means is the Fed probably will continue their cutting cycle in December.
No, so let's talk about that because again, I don't think they're going to cut in December. I really
Okay.
don't. I mean, you just had an inflation print. Now you're going to get I think they have a CPI and a PPI reading before the next meeting, not
Yeah,
PCE.
the week after next. Yes, it's the week before the next
Yeah,
meeting.
so they'll get one more reading. I just don't know how
Actually,
you
I'll
could
show you.
cut.
Let me show you. Let me show you exactly where it is. So this is December.
Okay,
So here's CPI right here,
there you go. So 1 week
and
before.
here's the Fed meeting, and the Santa rally starts here.
Yeah, I just don't know how you can cut with all three inflation readings being up the last month and the job market still producing 200,000 jobs and a 4.1% unemployment. I just don't know how you cut with that.
Well, I can tell you why I think they would cut,
Okay,
and that's because the Fed's not going to go just by those past data points.
of course.
They're going to also look at future data points, and they know that this is coming.
Oh, they do. Yes, for sure.
They know that's coming. So
I, yeah,
why not cut here and then just leave it there? Don't do anything through this period. Because you'll notice after this, back in here, this is June, July
yep.
meetings. It's going to actually start going up again.
Yeah, I just, again, you and I have been studying this base effect. You and I have been calling for CPI to go sub 2% because of this chart. So thank you for producing it, sharing it every week. But there's also some optics, and I just don't know how you could cut with inflation reading, right? Save the cut until you get a big drop, then cut after the big drop.
Well, I think they're going to do both. I think they're going to cut and then do nothing all the way through the
Right.
big drops.
Okay. Okay.
I think they'll do nothing until probably out here somewhere.
So no, so in your opinion, I think you've come around to the idea they're going to cut in December and then nothing for 6 months is what you're saying.
Right.
Okay.
Yes. That's what I think.
Yeah. Higher for
Exactly.
longer.
Higher for longer.
Hmm.
So let's take a look at the overall market and where we're at right now.
Yep.
Because I mentioned, we just started December today. Tomorrow's the first trading day of December. Santa Rally comes up
Yeah.
at the end of December. This
Yep.
is my market bias thing that I created. And we're kind of going up slightly, but
Hmm.
mostly sideways, but we're above the trend.
Yep.
So everything right now, if you look at the S&P actually hit a new all-time high on
Wow.
Friday, 6,032.
Sheesh.
Um, Everything is extremely bullish right now. The NASDAQ has not hit a new high, but it's heading up as well.
Hmm.
So that also is extremely bullish. December is typically a bullish month,
Sure.
although the beginning is choppy. The first 2 weeks of December is choppy. You can see right here. So we could actually the very first day of December, this comes from Stock Traders Almanac. Historically, the very first day of December usually is a down day
Hmm.
in the market. So that's Monday. We'll see if that holds or not. But according to this, it kind of choppy. It goes up and then comes back down right after the CPI report
Okay.
and then
Yep.
the Fed meeting. And if the Fed cuts again, then the market takes off.
Okay.
And in particular, look at small caps. So this is the thing that a lot of people are talking about. The small caps are poised to really explode higher. And
Hmm.
that's these dark lines right here. So historically, going back to 2003 for 21 years, 1950 for election years, um,
Hmm.
small caps are the ones that outperform starting in mid December.
Wow.
So
Hey,
that's the thing.
I don't know if you saw this. It was a CNBC business, a small business survey, which again, probably smaller than the Russell 2000, but just generally speaking, uh, the optimism for small businesses has taken a marketable upturn post election.
Right.
It went up 11 points in their
Mm-hmm.
latest survey. So
Yeah.
I think there's a lot of renewed energy and vigor and for small businesses who've been wrecked the last 2 or 3 years because of inflation and all of that.
Yeah, I agree. I think small caps are going to take off. And here's an example here. This goes back to 1979, which is when the Russell 2000 was created. This is December through March, basically.
Hmm.
This trend right here. That's a
Yep.
historical trend, so it doesn't mean it has to do that. And this is actually was done in about about 2 weeks ago. So we're actually higher up. This orange line is where we are now. We're actually higher up here. So in general, everything's pointing to small caps continuing to go higher
Yep.
and maybe even just now beginning to take off.
Hmm.
So if we look at go back to the charts page and we can look at the small caps Russell 2 year view. So you can see right there it broke out.
Yep.
And if you go back even further, let's take this back 8 years. So that was the high back here in 2021,
Hmm.
and we just broke above that.
Okay.
So many times, whenever something breaks out like this, it will pull back to that support line and then really take off from there. So right now, it's just kind of moving sideways the last few days.
Hmm.
And if the 1st of December is down, first trading day is down,
Hmm.
then it may pull back a little bit Monday. But
Okay.
the rest of December, it might just take off. Now, let's talk about the Santa rally because because we're in December, everyone's going to start talking about that as well.
Yeah. Before you bring that up, I do want to give you a shout out for last week's call on Bitcoin. You said
Oh,
Bitcoin would very likely trade down in near 90,000. It got down to 91 and change. So I wanted to give you a good
it
call out on
it
that.
actually got down lower than that.
Oh, it did. That's the
Yeah, if we
lowest I
could,
saw.
there's a Bitcoin chart right on the front page of my site. So let's see. Let me tell you what the low was right here. The low was 90,730.
Oh, look at you. Nailed it.
So I actually drew this line at 90,000 right here.
Yep. Yep. Good for you.
Okay, right down to that and started back up again. I think it's going to take out 100 and it likely is going to go to this 102.5 area.
Nice.
And the whole market is bullish, and I think it's going to stay that way until mid-January.
Mm.
And then we have to watch out.
Yeah, then we got to be careful. You've been saying that for a while now.
Yeah, so let me touch on the Santa Rally real quick. So this is
Mhm.
2023 Santa Rally. Everything was positive, and that's what happened. Up 21% for last year. So here's the Santa Rally, these three components over here.
Yep.
All right. 2024, which we're still in, is right here. At the high, we hit 27%. I think we'll break higher than that. So we might be 30% for the year.
Mm.
But these are
Wow.
the three Santa Rally components down here. And two of them were negative, one was positive, but look at the trend. So they go in order of date. So Santa Rally is the last 5 days of December and the first 2 days of the new year. That's over here. And then the first 5 trading days of January is the January effect, and then the full month of January.
Mm.
So the first one started off -1, the next one came to basically flat,
Mhm.
and then the last one was up 1.5. So that indicates the year will be higher.
Mm.
Doesn't tell you how high, just says that the year will likely be higher.
Good.
And the year was much higher.
Yeah, I'd say so.
So this doesn't start till December 24th, but I will start to track it again
Nice.
once we get to the 24th, and we'll track what the results are for each one of these as we hit them.
Folks, and
So,
also don't forget Dan has a playlist on this channel. You can go back and actually watch him map these out in 23 and in 24. That's the
right.
beauty of having an active playlist.
Yep. A couple of other things I want to point out that I noticed, and these are some internals in the market. Price to earnings ratio. I had a interesting conversation with somebody on LinkedIn about the CAPE ratio. Do you know what
Oh,
that is?
I do not.
So the CAPE ratio is the cyclically adjusted price to earnings.
Mm,
Um,
okay.
Robert came out by Robert Schiller,
Oh,
who you
okay.
know from Case
Yep.
Shiller, right?
Yep.
So what this means is cyclically adjusted basically means inflation. So it's inflation adjusted price to earnings. And what this guy said was it is at it's one of its highest points. I think he said the second highest ever.
Mm.
And the last time it was higher than that, it was the Depression, the
Oh no.
1929 crash,
Oh
right?
no.
So his point was the market is about to crash by 80%. And I said, so if
80% crash?
that's what he said. Yeah.
Okay.
And I said, so if that's the case, it's going to go back to the previous secular bear market back in 2008 timeframe.
Mm-hmm.
I said, that has never happened in 100 years. Never. And then he said, well, maybe it's a little bit extreme, but yeah, no kidding.
Yeah, maybe 80% crash in the stock market. It's a little bit extreme.
So I decided to incorporate the CAPE ratio into this as well. So first of all, the S&P ratio, typically normal is between 20 and 25.
Okay.
Right now it's a little above 30.
Okay. So we're a little we're
We're a
richly
little
valued.
we're a little escalated. Yep.
Yep.
So if you look back, last time it was at this point was back here in 2021, which was
Mm-hmm.
a raging bull market
Yep.
most of the year.
Yep.
It was coming down at that point though. So
Uh-huh.
it hit it back over here after the pandemic. It hit higher than that and then went up and then came down. So yes, it is elevated. So that is a warning sign. The CAPE ratio is also moving up. However, so I compare it to the PE ratio. So the black line is the CAPE, the inflation adjusted to the regular PE. And so it is moving higher. The red line is the CAPE ratio versus the 10-year treasury. It's also moving higher. However, and it just broke this downtrend line right here. However, it's not above the high that it hit there, and it's not above the high that it hit there.
Hmm.
So I would agree that it's flashing warning signs.
Sure.
And like I told this guy, I said, I don't disagree with your thesis. I just disagree with your timing.
Yeah, we've talked about that a couple of times.
Right. I
The
said
timing.
I think we've got 5 or 6 more years, and he says no. I think it's going to be in January.
It's like we got 5 or 6 more weeks, is what
Yeah.
he's saying.
Right. That's what he thinks. And
Nice.
but you can see earnings here too. Even though the PE has gone up, earnings themselves have not
Yeah, that
hit
moved much.
a new high yet.
Hmm.
So
Okay.
just something that we need to keep an eye on. The other one that I noticed is my risk on, risk off chart, which I think I showed last week. But risk on, risk off is basically looks at the bond market.
Hmm.
And if it's risk on, then people are buying junk bonds instead of 20-year treasuries,
Right.
right? So this compares the two. So if the trend is higher, that means most people are buying junk bonds instead of 20-year
Hmm.
treasuries. So right here right after the election, actually, coincidentally, it moved down a little bit and now it's just dropping off a cliff.
Okay.
So what that means is risk is rotating out of risky investments into safe investments.
Interesting. Okay.
Okay. Then we can look at investment grade corporate bonds versus the 7 to 10 year treasuries.
Same deal.
You can think of this as like the treasuries. Same deal ever since right after the election. It's moving down. High
Okay.
yield corporate bonds versus 3 to 7 year treasuries. So we're going a little bit shorter, right?
Hmm.
So the longer term is much safer. The shorter one's a little less safe,
Okay.
and it's starting to move down as well. If we look at the growth versus value, it's moving down.
Hmm.
The only one that has stayed up there is discretionary versus staples. And also, even though it's above its annual high,
Hmm.
ever since the election, it's slightly moving down too.
Well, this one's also going to be significantly distorted by Tesla.
Yes, that's right. Tesla and Amazon make up 45% of the whole thing.
Yeah, if you just took Tesla out of that, I think that downtrend would be far more
Yeah,
pronounced.
actually, be interesting to see if there's a way to do that. But
Yeah.
at any rate, this is kind of the internals. You can see the S&P is flat right now, so it was going up through this whole period as risk was going up.
Hmm.
It's flat right now, and risk is coming down dramatically. So this is similar to what happened in December of 21, and we need to watch this throughout the rest of this month because the same thing happened if this continues. The same thing happened in the December of 21, and I said then, and we first started doing this at that point,
Right.
and I said it's looking to me like Wall Street is rotating out of risky assets and into safe assets.
Yeah, no, again, you go back some of the early videos and watch him make that call. He basically called the 2022 pain
Right.
when we started doing this. So nice job.
The very last thing I want to mention is this is something that I'm working on right now, and as we get closer to the end of the year, I'll have something more. But I'm going to put together a list of dividend
Oh,
stocks for next year.
okay. Oh,
And
interesting.
I'm using Dividend Aristocrats. So, for those that don't know, the Dividend Aristocrats is a group of companies that have increased their dividend every year for 25 years.
That's a
All
long
right.
time.
That's a
Yeah.
long time. And if they ever do not increase their dividend, they fall out of this list
Right.
and they cannot get back in until they've increased their dividend for 25 years.
Okay.
So they can't get back in for 25 years, basically.
Hmm. Yep.
All right. So it's a pretty strong list.
Yep.
And in the next couple of weeks, and anybody can get access to this list. It's out there. You can Google it,
Sure.
Dividend Aristocrats. But I'm going to put them all into a list like this. And then I'm going to sort it by dividend yield,
Hmm.
right? And I will also sort it by percent change. We can look at year to date. So we can look at the year to date for this year. These are the ones that have had the highest year to date. But so this is the highest year to date, MDU and Walmart. But the dividend yield isn't great.
Right. Yeah. Sub 1%.
But
Yeah.
I can sort by dividend yield as well.
Okay.
And we get some properties over here. I think it's a REIT probably.
Yeah, definitely.
Actually, I want to do this. That's the actual dividend. I want to look at the yield. So these are the ones that outperformed. The stock itself outperformed 85% right here, and their
Mhm.
dividend yield is 2.6.
Got it. Okay.
Okay. So I'm going to sort this by anyone that has a dividend yield more than 2%
Hmm.
and an outperformance of more than whatever the S&P did, so
Okay.
27 or 30%, and also ones that are moving up in the last 6 months. So I'm
Hmm.
going to end up with a list of 10 or 20 stocks
Sure.
that we're going to watch over the next year, and they
Oh, I
should
like it.
be good. They should be good performers next year as well.
There you go. This is Dan Bird doing work for you guys. We appreciate you, Dan. One more time, show the website before video too.
Sure. Breakpointtrading.net. The free newsletter is right in this little box right here. My YouTube channel link is right here. I noticed when people watch this video on your channel,
Yep.
sometimes they ask, "Can you post
Yeah.
my YouTube channel?" And you can't post links, unfortunately, in
Yeah.
there
They
because
don't
they,
like
they get
links.
deleted, right?
Yeah.
So I'm just going to say it right here. If anybody's watching, just go to breakpointtrading.net. There's no cost to do that, and you can click right on the YouTube channel link right there in the upper right.
There you go, Dan. You're amazing, man. We'll look forward to video
And
too.
the next,
Thank you.
by the way, the next one we're going to talk more about inflation, CPI, PPI, PCE, and the dollar, and then we're going to talk about the ruble collapsing.
There you go. Thanks, brother.
All right, take care.